Small Dino here, Hillhurst Mortgage. Hey, I wanted to do this quick video to help you understand supplemental property taxes. This time of year, when the tax bills come out, everyone has questions, and if you're lost, don't feel like you're the only one. This is very common, especially if you've purchased your home in the last 12 to 24 months. So basically, let's take a look at this diagram here. As you can see, art was not my strong point in school, but what we have here, let me just give you a little background on how property taxes work. So first of all, to remember, what we have here is a chart, July 1st, 7/1 through 6/30. So number one, property taxes work on a fiscal year, July 1st to June 30th. There's two installments of paying taxes. The first installment is due November 1st, but can be paid as late as December 10th with no penalty. That is the first installment. That covers the period July 1st through December 31st. The second installment is due on March 1st, which can be paid as late as April 10th with no penalty, and that covers the second installment, which is January 1st through June 30th. Now, when you purchase a home in, just throw any date out there, July 10th, basically what you inherit is the seller's tax base. So if you pay, say, $600,000 for a home on July 10th, 2017, and that seller had purchased his home back in the day in 1960 for $100,000, then you will get your tax bill in October that is due on November 1st, and it'll be based on the seller's tax bill. So you'll be all excited. Yippee! Doug and Hillhurst gave me overstated the taxes, and they're all excited. Well, don't get too jubilant over it, because basically the supplemental tax bill is exactly designed to fix that problem. So keep in mind, there's tons of bureaucracy and red tape with the county recorders. It takes a long time for them to update their records from a sale of real estate to adjust the tax base to the correct tax base. So on that $600,000 purchase in July of 2017, it might take 18, 24 months up to update that tax base, so that going forward, you only get one set of bills every October, and they gladly give you the March 1st bill comes in October, just in case you want to pay it early, which you may or may not want to do. But supplemental tax bills are designed to reconcile the seller's tax base with your tax base as the buyer. So in our example, when the seller paid $100,000 back in 1960 and you paid $600,000, that $500,000 difference is where you get a supplemental tax bill to reflect the time you purchased the property up until the supplemental date. And then, like I said, when the county updates their records, then you'll be in a position where there won't be any more supplemental bills going forward. Now, back to the diagram here. So that's number one. Now, number two, we also answered that. Why supplemental bills? People get frustrated. That's why there's a little frowny face here, is they don't understand. But three, I get this all the time. Dude, I have an impound account. What the hell? Now, an impound account, as you know, and most people, a lot of our first-time buyers do want impound accounts. Just a fancy name for a savings account. Basically, when you pay your taxes or your mortgage payment every month, you include 1/12 of the taxes with the mortgage payment. So the lender collects the payment, they deposit their interest and offset, reduce your loan balance, and then they put the tax amount in a savings account, so that when the taxes are due on November 1st and March 1st, they pay them for you. Now, interestingly enough, the lender starts collecting impound accounts based on the correct tax base. They just do it based on your purchase price. So if you paid $600,000 when you make your first payment, and I said we closed July 10th, your first payment will be due on September 1st, and they're going to collect 1/12 based on the $600,000. So what that means is if you look at your statement, there's going to be a large credit balance, a large surplus in your impound account. Now that amount can be used to pay your supplemental bills. However, don't assume the lender is just going to do it for you. You have to call them and confirm. Every lender does it a little bit differently. So sometimes what they'll do is you tell them, hey, I got a supplemental bill. They'll say, okay, forward us a copy of the supplemental bill. They'll pay it for you. Others will send you the money out of the impound account and then have you pay it. The moral of the story here is do not ignore supplemental tax bills. If you have an impound account, they're probably already paid, or I should say there's already money set aside for them to be paid. But you do need to call the lender, check your statement carefully every month, be sure that the impound account is being updated properly. If you have questions, of course, call us, send us a copy of the supplemental bill and a copy of your mortgage statement. We'll be happy to look at it. Number 4, paying taxes. So when you pay the taxes, don't always pay the taxes if you have an impound account, because the lender is going to pay them for you. If you don't have an impound account, do not ignore supplemental taxes. Pay the supplemental taxes. You owe them. But if you have the impound account, most likely there's already money there for you to pay the supplementals. You're probably good to go. One little nugget on income tax considerations. Remember I said when they send you the tax bills, they usually send you the April or the March the second installment along with the first installment. Well, if you pay the taxes, both installments in the current year, you can deduct them in the current year. So effectively, if you pay your November 1st payment on time and then your March payment, instead of making that in March, you make it in December, you'll be able to have an extra tax deduction when you file your 2017 federal income tax returns. So just an idea, something to consider, run by your tax advisor. Again, if you have any questions, please call us. Happy to answer any questions you have. All right. Well, thanks, guys. And please reach out if you have any further questions about supplemental tax bills, income tax considerations, mortgage rates, or for that matter, any financial matter. We're happy to help all the time. Thanks again, and have a great day.